So a tire company, a railway, and a state fund just bought a Robotaxi startup. Niulinx raised 38 million euro, early stage, and the cap table is the most unique you'll see probably this year. Pirelli is in, Ferrovie dello Stato, which is the national railway, A2A, CDP. So on paper, it looks like 5 random investors. It isn't. Each one owns a piece of the infrastructure a robotaxi actually needs to operate. And this doesn't seem like a funding round, but more of a coalition. So not a negligible round, I would say. Definitely like an interesting pool of investor that kind of hints to someone. And, if you piece everything together, then you can really see how it's an Italian mobility stack kind of play, which is disguised as a VC round. So that's very interesting. So we have the software layer, which is Niulinx. We have like a A2A with energy and energy distribution, Ferrovie with the different hubs, Pirelli with, it's not just tires, I would say. There is a lot of elements in basically analytics for the road. So it's pretty interesting. So Nick, what is your first impression here?
So I like it the way you frame it. If you don't have the capital and the firepower of an American for an American startup, then you bring in the entire ecosystem, the entire technology and commercial stack that you need in order to operate. That's a nice framing. I
There
like
you go.
it.
Thank you.
Yeah. I really like it, and I'm not surprised actually of the results. So I mean, um, I really appreciate. So this is an early stage round, 48 million in a autonomous mobility startup. So that's like wow. That was not on my bingo card for this year in Italy. I mean, so this is super interesting. And the group of investors is absolutely unconventional for what we see usually. So super interesting. And the group of entrepreneurs is top notch.
And interesting enough, this I feel it's not the first time that we have like a pool of industrial that kind of finance a company. And we've kind of discussed other situation where this happens. So very promising model probably. What I feel differently is that probably here is like extremely like focused and narrow. So I don't know, maybe tell something about the chance of this company like succeeding. Automatic mobility is not easy at all, as we know from Waymo, Tesla, and so on. So, and maybe that's the right shot for Europe.
Yeah, I hope so. Of course, absolutely hope so. We need this type of innovation, right? So it is happening elsewhere. We know that Europe is not an easy place to start things that have, also touch regulatory issues. So it is not just a matter of capital, not only a matter of technology. It is a matter of introducing new technologies in the everyday behavior of society. And in this case, with touching also security angles, safety angles, like autonomous taxis. So
No,
you need,
exactly.
yeah. See, so you need a lot of work to orchestrate all the stakeholders that you need to involve with this. So that's probably also one of the reasons why we see so many different players in this round.
And what is interesting is also that the way they kind of framed the business, which is not sort of fully autonomous since the start. The autonomous piece actually in the value proposition happened in between basically the car rides. So essentially the original idea of Niulinx was basically to have you delivered the car autonomously, then you kind of drive normally. And then basically, as you're done, the car goes away by itself. So it's considered like a level 4 autonomous driving. And apparently this is way easier in terms of regulation for Europe. So I thought it was pretty smart on how they framed this, because that's kind of the most adjacent way to actually get to the full autonomous part. So it's a very interesting angle and very kind of well placed maybe in the European context. So I thought that piece was very unique. Europe is always like much tighter than US compared like regarding regulation. So there was very smart for them.
Yeah, and I can add one bit to this analysis. So this is a spin-off of the Politecnico of Milan University. So we also have the research and university angle. I think we needed some type of technology with strong research roots coming out and going after a very important market. So I really appreciate also this.
No, it's great point. Again, like a lot of pieces that actually fit into the European sort of paradigm. So the sort of the companies, the university, so everything kind of lines up really nicely. What I would also add maybe is the fact that they're kind of taking the opposite approach than autonomous driving in the US. So people like companies like Waymo and other company in automotive drive, like autonomous driving in the US, they start from the software layer, trying to solve the machine learning and machine vision problem first, and then they build the infrastructure. Here is kind of completely the opposite. So here is more like a infrastructural part straight from the beginning, paired maybe not the opposite, but really brought in a parallel way. So it's pretty interesting to see this kind of like alternative approach to autonomous driving in this way.
Yeah, that's an interesting point as well. I have no idea whether this will work, but it's interesting to see the infrastructure and the software growing together side by side. So we'll see.
The only issue, and Nick, I'm curious about what you think about this, is the amount of money raised. So 38 seems a lot, but if you think in the bigger picture of autonomous driving, when Waymo, Tesla, exactly, you already know, when Waymo and Tesla are like investing and spending billions just to collect data, test, etc., it seems extremely small actually.
Yeah, I agree. But let's put it this way. This is the moment when you need the most courageous capital, probably, and the fact that it is a sizable amount of capital might be enough to get to that level of confidence with the technology, with the product, where you can attract the more mature capital from within Europe, not even thinking about outside of Europe, but thinking as an Italian investor at the seed stage, so attracting that amount of capital in such a technology from Europe in this stage, extremely difficult. Maybe the next stage, maybe that can be a more European angle. Not even thinking about investors coming from outside of Europe, but there might be an opportunity in the next step if you look at it at least with the European lens. Once you de-risk the initial steps of the technology of the product.
Love it. So basically, the sort of the initial capital is really like a risk prone, and it's a signal more than like like a scaling capital so far. So probably that's how we should frame maybe this round. I think it's a good point. Yeah. All right, moving on. Very interesting news last week about the European Commission. So as we know already, the European Commission has different arms that are either investing in startup or actually making some move in innovation. And I thought that it was very interesting that you point out this one because the European Commission approves 211 million Italian state aid measure to support photonic chips development. So a few interesting points here, right? So first of all, it's not something we've seen before. So this is basically in the form of a grant. And if you read between the lines, basically there is a specific company, which is an SME, that is going to receive this grant from the Italian government. And everything is pretty much like overlooked and approved, of course, by the European Commission. So I would say not a typical round that we've seen maybe before from the European sort of VC fund or CDP for all that matter. So interesting angle, I would say. What was your first reaction here?
It was like, what? No. But this was super unusual, as you said. So I've never seen such a measure involving an Italian age startup with such a big grant for R&D opportunities. In this case, the startup is CamGraPhIC, which is a startup part Italian, part UK based, if I'm not wrong.
Correct.
So
Cambridge,
it's
yeah.
an international player, Cambridge based. There you are. with in the deep tech space, we're talking about photonic messaging, if I'm right. So there are various applications, including probably quantum computing and stuff like that. So I think they have a specific application in data centers, maybe, whereas they are able to decrease the heat and the energy cost of exchanging data. So let's not talk about technology per se, but the fact that the European Commission decided to support the development of a specific technology, which is probably perceived as key for some for the local technology opportunity, for the European technology or stuff, or at least um, the Italian interests as a nation. And they approved a very sizable research grant for the startup. But these are all elements that are, let me say unusual, so unseen before, at least by me. I never,
No, I agree. And
know.
what kind of begs the question in a certain way is whether are we going to see like more of these frame sort of investment like frame like this in the future? Because basically this kind of regulation and paper I think came out in 2022. So it's based on Article 107.3c of the Treaty of the Functioning of the EU and the 2022 State Aid Framework for Research, Development and Innovation. So, 4 years later, we see like big movements, big massive movements. I'm not sure exactly if, other companies in other parts of Europe have been funded thanks to this grant program. But my suspect is that, okay, it's been a while, it's been 4 years, but maybe it's time where that would unlock a certain elements of grant specifically for the European Union infrastructure in general, like sensitive technology like photonics. So we hope maybe that will be the case.
Yeah, I agree with you. Such a framework, if applied in a very strategic way, could be very important to unlock the European opportunity. So energy is probably one of the angles that we should look at. Maybe mobility, huh?
There you go.
Niulinx, wink, wink. There you go, no? So this is super interesting. So we have these tools at our disposal, available to us. So super interesting.
Yeah, one last piece is before we move on is also the fact that also the same company received funding from the NATO fund. So there is a little bit underlying flavor of dual use technology kind of angle. So it's an infrastructure, but by the way, is also like military in certain ways or like national security sensitive. So it's a whole deal that has different components and different moving parts. So the NATO part I think can help us explain this kind of big deployment of funds, I would say.
Yeah, I agree. I agree. NATO is for sure a catalyst, but the key point is for sure the national interest. In this case, of Italy and of um, the European Union.
Awesome. All right, so moving on, there is one article which I thought it was very interesting, Nick, that you point out. So it's an interview of a few of the major venture capital investor, including Gianluca Dettori from Primo Capital, basically asking the question: okay, would you invest in one person AI run startup, and maybe what is the implication of that for venture? So I think here we can talk about that like for hours. What is your first take on this?
Well, this is the question that is becoming every day more and more relevant, meaning it's not so hypothetical. Maybe not a one-person startup with lots of agents, but today we are seeing startups that with two, three founders, they can get very far in developing the product and marketing it and bringing it to the market. So things are changing very fast. So the question is emerging. I think I like the answer by Gianluca, I believe. His answer is super interesting. Yeah, I mean, a solo founder. Yeah, but still, you run the solo founder risk. What if anything happens to the solo founder? So who
Yeah,
takes over
it's
the company?
concentration of
I
risk,
mean,
right? So that's
complex concentration of risk.
anti diversification founder wise. So that's really
Yeah,
interesting.
you have an army of AIs that run the company, but who takes the final decision? So if he's not there anymore, who takes the final decision? So I mean, is Opus 4.7 good enough to run the company? But we
Yeah,
are getting there probably. I wonder
we're
if
getting there.
Mythos will be good enough. It's for sure a cybersec killer, but
Yeah, I mean a couple of other points.
the question is relevant.
Yeah, another point that Rocchietti from Club degli Investitori pointed out was the fact that there is maybe a dependency in kind of like what kind of software or company they're developing. Like deep tech, for example, AI agent can go so far. You need actually a team of like humans that run certain operation, and that's a given, and that's how basically the business work. And that's one point. So maybe it's also vertical specific and product specific. So that's one point. The other element that Gianluca was mentioning was the fact that maybe we're hitting a point where pre-scalability, you have quick MVP testing and lean sort of operations thanks to AI, but you're gonna hit a point where if you want to really scale compliance-wise, person-wise, customer relationship-wise, business development-wise, you will still need humans in the loop, in some form. Maybe less, but it's definitely like a small, concentrated, and sort of SWAT team-like, augmented by AI agent infrastructure that's probably preferable to a purely AI company.
Yeah, that's a good point. So, I mean, but that begs a different question, or the one that was raised by Sam Altman. So we are going to see the one-person billion-dollar companies. That's kind of a different question, right? So, and it's another thing that it is expected to happen sooner or later. And billion-dollar company in terms of revenues, this valuation maybe, but I mean
Yeah.
that's a long way to go, right?
Or maybe it happened, and OpenClaw. Maybe that's the $1 billion company that nobody's talking about again. So I don't know. Nobody knows. So maybe it's already there.
Yeah, it depends on the lens. So on the lens that you use to look at it. I mean, they have a lot of contributors to develop the OpenClaw. So I mean, maybe they have one employee, but hundreds of contributors to the source. Even though those contributions are mediated by Claude or Codex, but still, good point
So
though.
yeah, I mean, one last question is probably to see how the one person or few person plus AI companies are going to get funded and how VC is evolving. What is interesting is that every single person is kind of hinting and feeling that there's going to be a massive tectonic shift in how VC probably is done. Maybe not in the first principle, in terms of capital risk, in terms of traction, product, solving a problem that people need to be solved. But maybe there's gonna be some definitely like funding paradigms that will not apply anymore. I think it's early to maybe run to conclusion. There is still a lot of moving parts, but that's the feeling, right?
Yeah, I agree. That's the feeling. But the dynamics of the market are changing fast. So, I mean, in the software market in particular, things are evolving so fast that it's very difficult to keep track of what's going on, or whether to have a well-formed idea of what's happening in 12 months or 24 months. So, I mean, there are players that are long the infra play and short the application play, and vice versa, for various reasons. So you will hear a lot of different takes on this. What is probably going to happen sometime down the road is that my Claw will negotiate with your Claw as a founder about the next funding round, and then we as people we only get together to sign the contracts. I mean, that would be fun and
Yeah, I mean
interesting.
it's also efficient. So why
Also
not?
efficient.
Why not as well?
So that means that I could be out there with my close negotiating 12 deals at once every single day, and my portfolio would be like 1,000 close startups with one founder each, founded in a very partial fragmented way from by my fund. Those things will happen. It's just an acceleration of trends that already exist. No,
Yeah, I
you
mean,
already have
also
funds that invest in one deal a week.
maybe
What's the
even
difference
the
between one and two?
yeah, and maybe also sort of the liquidity status of VC, because maybe funds are going to run agents to actually negotiate deal, but why not also negotiate in maybe secondary shares exit when the secondary market is slow, maybe when a return, maybe the close can negotiate secondaries. So I mean, it's pointing toward a direction of making VC more liquid in virtue of the fact that more interaction are happening, of course, between agents, guardrailed or not, but easier to allocate, easier to liquidate, and easier to move around. I don't know, I'm just pushing the boundaries of your reasoning, but I think you're
That,
on the right
that, that
track.
would be that would be fun. That's probably something that's the market could appreciate. I mean, in the close might take away the emotional attachment to your portfolio company to sell it too early, or I want to keep it one more year. That's sometimes it is irrational, and selling at a specific time might be the
Great
right
point.
move. So
Yeah,
having
great point.
close taking away the emotional
Yeah.
relationship might be actually an advantage to many fund managers and to the market.
Right, Nick, thank you so much for joining, and see you next week.
Ciao, Jack. Take care. Thank you very much. Ciao, everybody. See you in a week.